Ladies and gentlemen, good day and welcome to Mitsu Chemplast Ltd Q1FY2024 earnings conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Kajol from Kirin Advisors. Thank you and over to you.
Thank you. On behalf of Kirin Advisors, I would like to welcome all to Mitsu Chemplast Ltd Q1FY2024 Concall. From the management side, we have Mr. Manish Dedia, the Joint Managing Director and CFO, and Ms. Kashmira Dedia, Vice President of Finance and Accounts. Now, I hand over the call to Mr. Manish Dedia. Over to you, sir.
Yeah. Hello, everyone. I extend my warm welcome to you for our first quarter conference call to discuss Q1 FY24 performance and outlook going ahead. Despite cost pressure and market condition, we have a sustained turnover and profitability. We are optimistic on demand growth while we are equally concerned about cost pressure. Our focus is on minimizing cost and improving our profitability. Let me share the demand perspective with you. India rigid plastic packaging market is expected to reach $18.02 billion by 2027, growing at a CAGR of 8.01% from $11.55 billion in 2021. The strong growth is driven by rising GDP, increasing per capita income, surging sales through e-commerce and changing consumer perception. Rigid packaging is largely replacing traditional packaging such as glass bottle and jars, cartons, metal cans, etc. for variety of reasons including lightweight, lower comparative cost, design flexibility and ease of recycling. Indian pharmaceutical market is growing at a double-digit rate. Pharmaceutical packaging is becoming increasingly important component of drug delivery system. Pharmaceutical companies are increasingly relying on packaging and labeling as a means of protecting and promoting their product as well. As increasing patient compliance and complying with the new regulations, plastic packaging is gaining importance due to properties such as moisture barrier, high dimensional stability, high impact strength, resistance to strain, lower absorption, transparency, heat and flame resistance, and so on. Plastic is one of the most commonly used material in the food industry for food packaging. Its role in the food safety and reducing food waste has made it an essential material in the food industry. Similarly, hospital furniture is another lucrative growth area. We have seen sharp jump in demand during COVID pandemic. The growth prospects are bright with many new hospital facilities are coming up and the government thrust on medical facilities as well. India is becoming more of manufacturing hub and its export are increasing as well. To cater to the international market, packaging standards are being raised which necessitates the use of better packaging method to ensure that the end product quality and visual appeals are of the highest standard. So you see the demand outlook is a very bright. Mitsu is known for quality products and customization, and our approach meet customers' demand will help us ride on rising demand cycle. We project strong outlook for current year. Softening of oil prices is another positive for plastic packaging. We have seen softening of oil prices from May and June, and the trend is still downward compared with a year ago. All in all, we see positive outlook for our industry in near future. I now hand over the call to Ms. Kashmira Dedia to give an update on Q1 FY24 for performance. Thank you.
Good afternoon. We started FY24 on a positive note with a total income of Rs 80 crores and net profit of Rs 1.35 crores. At EBITDA level, we reported profit of 5.03 crore, while PBT is rupees 1.84 crore. The company's molded industrial plastic packaging products accounted for the largest share of 84.68% to the revenue, as it continued to supply OEMs of various industries such as chemical, pharmaceutical, dyes, agrochemical, disinfectants, etc. The hospital furniture part verticals also contributed 7.51% to the revenue, and other verticals including infrastructure furniture contributed to 7.82% to the total revenue. Mitsu Chemplast Ltd continued to maintain a good level of capacity utilization during FY23. The company's plant operated at an average capacity utilization of around approx 70% plus on installed capacity of 25,000 metric tons per annum approx. The capacity utilization was achieved through efficient production planning, effective cost management, and timely investment in technology and machinery. With this brief update, I would like to open the floor for questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yashwanti Kedkar from Cogent Finvest. Please go ahead.
Yeah, thank you for the opportunity. So, I just wanted to understand the business outlook and the business growth, because from couple of past quarters we are not able to maintain the expected profitability. The cost pressure has been continuously weighing on our bottom line. So what outlook you will give, and as this is happening for a couple of quarters, what strategies are in place to optimize the cost and optimize the profit and minimize the cost?
Okay, thank you very much, Ms. Yashwanti. Yes, the observation is right. We are trying to do many other things also. So I think we did first a lot of value engineering with the production output, and so there we reduced the cost. But I think yes, we need to reduce some of the cost as well, and we are already started that, and we are reducing some of the cost as well.
Okay.
But outlook, it looks very positive. So somewhere, we do not have a extraordinary expense as well. But somewhere, the cost pressure comes, and that time your margin shrinks, and then maybe, sometimes that things gone down.
Okay. So are any hedging policies or passing on to the customers the hike, whatever the hike we are expecting we are seeing in the raw material cost? Are we in a position to pass it on to the customers or do the hedging for the raw material acquisition?
See, first thing, hedging in plastic is not too much possible, looks like. Okay. Number one. Number two, so what happens is prices are going down, going up. Both the things are happening here.
Huh.
Yes, we are getting price from customer also. But sometimes what happens is we are 60% dependent on the import.
Okay.
So at the time, and we have to keep definitely 75 to 90 days inventory. And then by the time raw material reaches here in India, so here the prices are different. So sometimes those margin pressure are too much, and inventory level and the local prices versus import prices makes a lot of difference then.
Okay, so then can we substitute it with the Indian prices? I mean the Indian material, or there is a quality difference?
No. So basically, out of 60%, I think 40% material is a compulsory material where we are buying from some other countries because India is not manufacturing that particular grade.
Okay.
So we are forced to depend on import.
Okay. So any benefit from the government is enjoyed by you when?
No.
No. Okay.
But yes, I think in a year's time, India will come up with a manufacturing facility of the same grade. But I think it will take 1 year. So unless and until the product comes out, we will not be able to sure. Because in world also, there are not many players. Only very few players. Only you can count it like 3 and 4 players are there whose materials are okay for the quality.
Okay. So it means that even your competitors would also be suffering from the same price hike and the higher prices of the raw material, right?
Yes.
Okay. So how we can distinguish from them?
Wow, good question. So distinguish, I don't know. So, some people are selling maybe lower than us. So somewhere we also found out that many suppliers like us are selling at a lower cost than us. So which we do not understand sometimes the market or the suppliers. I do not know. So sorry, I do not have that answer with me right now. It's difficult to say anything.
Yeah.
Nobody says truth, even the customer, even the supplier. So that's the biggest issue.
Okay. And in case the your competitors are selling at a low price, it means that you also have a pressure to lower down your prices. Am I right?
Right, exactly. So sometimes we leave the business, sometimes we have to pass on that benefit so we are doing mix of that.
Okay. So you expect that after a year or a year and a half, so we can see some tailwind in our profitability?
No, see what happens is the prices has gone down in May, after May end and June. So all the benefit will come in a Q2. But then again, how the Q2 will survive with everything. So whatever India is doing, India is a really growing market. Mm-hmm. So as of today, everybody wants to sell in India. Even the importer also, unlike those other countries, people wanted to sell raw material here. Mm-hmm. So definitely they match the price and all these stories then we will get a benefit maybe next quarter. So it spill over the rate.
Okay. So then is the strategy of introducing a high-value product, that is high-value, high-margin product, can be a strategy to counter this issue?
Definitely. See, we have already have those value-added product as well. Mm-hmm. But value-added product has some quantum. It cannot be a very big quantum. Mm-hmm. So those niche items, yes, we are supplying. Like example, hospital furniture, I say, that's a marginable. That other furniture, infrastructure furniture. But those are these are all goes in a capital intensive market. So then,
the benefit is nullified.
No, not benefit nullified. See, we get a benefit, but it cannot be repeat order.
Okay.
We supply to one hospital, example, those hospital furniture, and then they supply to one hospital. Hospital will not buy again and again. But yes, okay, the other hospital will buy for sure.
Okay. So here the client will differ from every quarter to quarter.
Yes. In particularly niche items. So we are also going for some value-added items also. But I think we have started some already the research and everything. It will take some 3 to 6 months down the line to coming with the product.
Okay.
Where we can have regular orders also.
Okay. So you say that hospital healthcare is a very niche category, but there is likely that many unorganized players also will be part of this segment, right?
Yes, maybe yes, because see, we supply to Pan India. We have a godowns in north in Delhi and in Hyderabad also. We supply to many customers, small time customers also who supply to hospital. So yes, there are many unorganized players also in this.
Okay. Okay. So thank you so much for your kind explanation. I will come back in queue. And all the best for your future order.
Thank you. Thank you.
Thank you. Before we take the next question, a reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Alok Damani from Shri Capital. Please go ahead, sir.
Hello, good afternoon, sir.
Yeah.
Sir, I want to know till how long we can expect the cost headwind to continue?
Cost?
Cost headwind to continue.
Sorry, I cannot. Cost के बाद आपका word नहीं सुनाई दिया. Sorry.
Cost headwind. Like higher costing.
Yes. Okay. No, so we have already taken many steps to reduce the cost. So I think you will see very soon the quarter on quarter you'll see the results. That's for sure.
Yeah. Okay. And sir, what is our EBITDA margin guidance for ongoing forward?
Sir, our internal target is 13%, but at least we are as a optimistic. We are saying at least 10% EBITDA margin we required this year.
Okay. And what measures we will take for it?
So definitely, see, as I said, a lot of value-added items we are also doing planning and all these things, and we have already introduced some of the new products as well. So we are trying to get some better margin in that product.
Okay, sir. May I know which product you are introducing, which in pipeline?
We will announce very soon, sir.
Okay. Sir, any new client addition in your portfolio?
Yeah. So I think we have added around 25 customers in last quarter.
Okay. So, sir, could you bifurcate your total revenue hospitality in the hospitality furniture contribution?
Yes, Kashmira will do that. When?
Yeah. So from total revenue, we have 84.68 in packaging and 7.51 in furniture, hospital bag furniture.
Okay. And sir, what is your in the status of your piles container business?
Status of?
Sales container business. Sir, can you just keep some distance with your mouthpiece and when you're speaking, because we are not able to hear your words properly.
Yes, sir. I want to know your status of your piles container business.
Sales customer. Okay. So yeah, it is going on, and we are still on that development stage. So many customers are on development because there is a lot of trial, error, and everything are going on. But at least I can say it was a good quarter. Last quarter was very little bit good, and then this we are trying to get more orders in this quarter.
Okay. Thank you, sir.
Thank you.
Thank you. We take the next question from the line of Anirban Manna, an individual investor. Please go ahead, sir.
Yes, my question is for last 6 quarters, the revenue is almost stagnant. So when we can see a uptick here?
Sir, sorry.
Sir, your voice is very loud, but we cannot clearly understand your question. Your words are not...
Sir, Anirban, if you are on a headset, please switch to your handset, sir.
Okay, now it's better?
Looks like. We'll try.
All right. Yeah, thanks. So my question is for last 6 quarters, revenue is almost stagnant. So when can we expect a uptick in the revenue? like almost 70 to 80 crores we are hovering in between this range. So when can we expect an uptick in this revenue?
So, I think once, I think in the last con call also I said the same thing. So we are, right now we are planning for improving our bottom line. Definitely turnover is also as well important, yes. We are doing now many development and many I can say many management involvement for both the things to increase the turnover and increase the profitability. Both we are doing things. So you will see next 2-3 quarters, you will see very good results. Looks like, sir. Hope for the market come back at its own.
All right. Any ballpark number for FY24 in terms of revenue?
So I think I can tell you that much, it will be much better than last year.
All right. Yeah, thanks. All the best.
Yeah, thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Himani Uban from Suraj Enterprises. Please go ahead.
Hi, sir. Good afternoon.
Yeah, good afternoon, ma'am.
Sir, my first question is, what is your working capital cycle?
So, Kashmira will give the answer on this. 54 days, right?
So, my net operating working capital cycle for the quarter is 48 days, ma'am.
Okay.
We have increased 4 days from last quarter. It was 44 days and now it is 48 days.
Okay. What is average interest rate?
Average?
Interest rate.
Approximately 11% in this quarter. Compared to last year, it was 9.97%.
Okay. Cash from operation was really good. So, any plan for capex?
Yes, we are. We will let you know soon. In the planning of doing that. So we'll announce soon, ma'am.
Okay. And what is your current capacity and capacity utilization?
Our capacity utilization for this quarter was on an average 70% plus, and capacity is approximately 25,000 metric tons per annum.
Okay. Have you taken any price hike to escalate cost to our clients?
Have you?
Have you taken any price hike to escalate cost to our clients?
Yes, ma'am. We are trying to do that. All the corporates, I mean, like, see, to be very honest, the last quarter was not good with our customer sector as well. So our customers are like chemical industry, pharma industry, new oil. So I think everybody has shrink their margin. So, yes, we are trying to get those margins, but like, it's really, really difficult. We are trying. So, once their market comes up very good, so automatically then our cost also will be accepted.
Okay, sir. And has any product added to our product portfolio?
No. So whatever the product, so small developments are already on, like, new, so in blow molding and injection molding, some of the products are on. But some value engineering products we are coming up, so it will take some time. So it is in a development stage. Once we ready, we will announce very soon.
Okay. And so my last question is, are you planning to start in exports?
Yes.
Okay. So till when we can expect?
Very soon.
Okay. Okay, sir. Thank you so much. That's
Thank
it
you.
from my side. Yeah.
Thank you. The next question is from the line of Guneet from CCIPL. Please go ahead, sir.
Hello. Hi, sir. Thank you for giving me this opportunity. You mentioned that FY24 revenue numbers will be much better than FY23. So would we start seeing this from Q2 onward itself?
Start? Yeah. So I am not just praising myself, but yes, in this pressure time also we maintain those turnover. Yes, profit margin has gone down, but yes, the numbers will be definitely better than the coming year, quarters.
All right. So Q2 FY24 would be much better than Q2 FY23. So and in terms of margins, I see that we are operating at probably the lowest margins in our history in Q1. So do you think that the margins have bottomed out?
Sir, I think the last line quickly I could not hear. I think you're calling from a mobile or something, but I could not hear.
All right. Let me just repeat it. So in Q1, we are operating at historically one of our lowest margins. So do you feel that the margins have bottomed out in Q1, or is there scope for going down further?
No, sir. Yes, your observation is very, very correct. And I don't think so. This is our, we don't wish to also go below that. Definitely, this is not our, I think this is the bottom. Now we cannot go below this.
All right, that's very heartening. And what kind of margin trends are we seeing currently, like Q2 onwards? I mean, what kind of margins are we seeing right now? Is there any improvement? And what should be the margins that we can expect overall for FY24?
Sir, I must say that, our targets are little higher, internal targets are around 12 to 13% of EBITDA margin, but at least, we should achieve 10%. Due to Q1 was not too good, so maybe we will have that margin pressure also. But I think we should achieve at least 10% of EBITDA margin this year.
All right. Sir, do we have any evidence currently that the margins are improving, or, what is the rationale for expecting 10% margins wherein we are sitting at around 6-7% right now? So do you see that market conditions are improving on ground right now, or do you expect anything, in future?
See, both. There are both. Definitely we are also positive in the market, the market condition definitely will improve because the whole world is looking at India, and now the export is also, I think, in Q2 onwards, the export will also come up. The chemical markets also, they have government started giving incentive, this PLI. So many companies are coming up with the expansions and all. So definitely the business will be there for sure. Okay. Now, when you're saying the profit margins will be better, so definitely see, we are also coming up with a new product. So here in Mitsu, we are known for a lot of innovations. So we are trying many new things here. So that's what I said. Very soon we will come up with the new product list and everything. So I think that is a strategy what we have right now as of today.
That is very heartening to hear. And can we expect an uptick in margins from Q2 onwards itself as compared to Q1?
Because as I said, the market, the raw material of our product market gone down from May, June onwards. And definitely those material what we have booked, and those are arrived in July, August. So that definitely now maybe we'll see a good margins ahead.
All right, that is very heartening. I wish you all the best, and thank you for this opportunity.
Thank you very much.
Thank you. We take the next question from the line of Lalit Kumar, an individual investor. Please go ahead, sir.
Thank you, sir. Hopefully my voice is loud and clear.
Yes, clear.
Yeah. Sir, I'm just summarizing the last three our friends who have given their thoughts, right? So I was just looking at our financials for last 5 years. We were a 100 crore company. Now currently we are a 300 crore company. To now become probably in another 3-4 years a 1,000 crore company, right? What are we going to do? Export plan was one, now we are 100% domestic, so export is one. So have we started thinking in terms of hiring global heads for our export strategies? We are now doing 25,000 MTPA. Have we started visualizing to be probably a 45,000, 50,000 MTPA? Our top 20, 25 clients are about 75% of our business. Have we started visualizing a much more diversification? Our market share is probably negligible. Have we started visualizing a market share of 10-15%? So, हम क्या strategies ले रहे हैं और इसके अंदर that we can become 1,000? Because cost side के अंदर we have absolutely no control. I mean, for all the imports which we are doing 60-70%, we have absolutely no control over there. So the only way is now on the demand side, how do we increase ourselves and become from the 300 to 1,000 crore place? So what is your vision onto this, and what is the plan which we have over here? I know that this question should be actually asked in the AGM, but yeah, I mean, at the paucity of time, I just wanted to hear your thought process, sir.
Mr. Lalit ji, right?
Yeah, yes, sir.
It was really, really thrilling. Your questions were so much thrilling. And it motivates us like anything. Thank you very much for those kind of questions. Sir, I think whatever you said and whatever you have analysis are very, very perfectly done. Definitely, we become little slow in some of the last, I think in the last year, second and third quarter also went very bad for plastic industry for many reasons, the BIS or EPR and all. Even nowadays also there's a lot of EPR. So compliances level we are trying to approach government for ease of compliance and all. Definitely. So those are also one of the part. The cost incurs there also. Whatever you say, but yes, and that's a big advantage to non-organized where unorganized people. So they don't have to apply all these things. So this is one of the biggest criteria. Okay, about saying that yes, we are looking bigger growth in next 2 to 3 years. So there will be a lot of things. As you know, FPO also was a plan for bigger expansion only. Definitely, so we'll have both vertical growth as a horizontal growth. Both we will planning to do that. For profitability, yes, we are adding many products. So lot of development